If the new stock market highs in the face of record unemployment, business failures, and economic pain strike you as unjustified, well, you are not alone. And hopefully, we will be getting some answers today from my guest on StansberryInvestor.com. Joining me today is Dr. Pippa Malmgren. She is a political and economic expert, and she is the former advisor to President George W. Bush. Dr. Pippa, thank you for joining me from your home in London. Good to be reunited with you.
Totally. I'm psyched to have this conversation. It's such an interesting topic.
I need your economic genius to help us make sense of what we are seeing in the stock market, which is obviously not reflective of the reality for so many Americans. How do you see it?
So first of all, stock markets are discounting the future. And so what stock markets are registering is we have a record sum of money in the system, right? All this government stimulus from every government everywhere, more than we had after the financial crisis. And that's happening at a time when we have a record wave of entrepreneurial energy as well, because so many businesses have gone bust at every different level that people either are going to say, well, I give up and I become a ward of the state, or they say, I'll start to build again. And usually when you have entrepreneurial energy and money looking for a home, those two sides are going to find each other sooner or later. And then you add to that a new phenomena that everybody talks about, but they don't quite understand what it means. That's digitization. And really what that means is, we're speeding the process by which decisions can be made, by which actions can be taken. And that was supposed to take a decade to go through that transformation. And it got done in the first 3 months of COVID. So it greased the wheels of the first two things that I was talking about. So basically, I think it makes absolute sense that just at the moment you're having the most creative destruction, painful as it may be, you are also getting it eased by record capital, record entrepreneurial energy, and digitization. And finally, I'll say, there isn't going to be one narrative that dominates this story. It's not like you can choose the pathway out. Everything you can imagine is going to happen. So some people are going to have the time of their lives loaded with assets, loaded with cash, and they're going to behave like F. Scott Fitzgerald's Great Gatsby, right? They're going to go nuts, spend on champagne. We're going to see the high end in a way we've never seen it before. But you're also going to have people who literally lost their foothold and can't get back onto the world economy. But I don't think it'll be as bad as it was back in the 1920s and 30s, because we're smarter, we have more data, we have less tolerance for that kind of human pain. And it's just easier to address it and fix it now than it ever has been before. So I'm less worried about the downside and more worried that people are going to miss the upside because they're so pessimistic.
So let's talk about the record amount of stimulus that we're seeing. And there's a lot of talk as how are people going to be spending their stimulus checks? What's this going to do for assets like Bitcoin, like Ethereum, like gold, silver? What could it do to these assets?
Well, like I said, now money is looking for a home. And some people have made extraordinary amounts of money in this crazy period of history, whether that's through owning Bitcoin or because they didn't anticipate the market was going to triple their money in a period they saw as, deep destruction. So another thing is governments have paid people pretty well during COVID. So they've got savings to play with. That's not everybody, but I'm just saying there's a big community that's more than they expected. So they're going to be free to spend. What are they going to spend it on? Well, I think they are going to go out and they're going to find any restaurant that's open. In fact, my anticipation is that we're going to have shortages. You will find you can't get a reservation. There's been so much supply destruction and you add some demand. So this is why I think we're going to get a bit of inflation. And I'm glad to see a lot of people are starting to come around to this idea, led by the supply destruction.
When speaking about this pent up demand, when you say a little bit of inflation, is it a little or is it a huge wave of inflation?
Yes. Well, this is a great question because how we talk about inflation really matters. So I would say we're going to go from 1% inflation in the industrialized world to 3%. Now, is that big or small? I would say that's massive. That's an unbelievable change for a pension fund asset allocation. That's a huge imposition on a poor family in terms of their cost base. But if you talk to people in the financial markets, they'll go, oh, 1 to 3%, I can handle that. So it totally depends on who you are and what your vulnerability and sensitivity is.
As I mentioned at the start, you were a former advisor to President George W. Bush. What do you make of the course of action that the current administration is taking, and what would you be telling Jerome Powell?
Look, the Fed has a very particular view, which is it's been the same for some years. It's just intensifying every year, which is they don't want to restrain economic activity. They just don't. They want it to go ahead as much as it can. And they don't want to have to put the brakes on until the market forces them to. So, Janet Yellen's position before becoming Secretary of the Treasury was, only after 100% of all Americans are employed would I like to raise interest rates. Now, the reality is they don't get to wait that long because the market gets nervous about inflation way before that. So I suspect what will happen is the market will start backing up and begging for a rate hike. And the Fed will give a little tiny baby rate hike. And actually, far from causing a total collapse, I expect this will be the beginning of confirmation that the recovery is real, that it's investable. And we should see a series of rate hikes accompanied by the stock market rallying every single time.
Can you break down NFTs for us? I know you're an expert in many facets, and this is one that you've taken an interest in. But these non-fungible tokens, I know for many folks, it's hard to get their head around it. A lot of people saying it's the ultimate bubble, or how do I invest in it? How do I expose myself to NFTs? Why would I want to? Give us your take on them.
I've been watching it because I think we're in a period of history where we're going to see extraordinary innovation in money itself. New kinds of money, including sovereigns are going to introduce their own version of digital money. We're already seeing that with the Chinese DCEP. And it's more than just money. It's actually, in my view, it's a surveillance system. It's a data gathering system as well as money. So I'm interested in all the different new forms of money. And one of them is what's happening in NFTs. The thing I find really interesting about it, what it does is not just about profitability. The people who are involved in it are not in it only to see the price go up. They're also in it because they have a sharing mentality. And this is not something we usually talk about in capitalism. But for example, the idea that if you buy an artist, then that artist, and you then sell the artist's work to someone else, the original artist is going to get 10% of the resale. So in other words, not only have you cut out all the galleries and all the agents and dealers and the middlemen, which of course, everyone in the younger generation is all over that, right? The disintermediation of the unnecessary middleman. So already it's attractive. But now you're going to get to pay an artist continually as the value of the artwork goes up. Now you're supporting the artist and the art community. So this kind of concept of sharing is very much at the heart of NFTs, and they can't really be assessed on a purely financial basis without you adding that in.
So then it would completely eliminate the need for the middleman, like a Sotheby's, like a Christie's.
Oh, totally. It's completely demonstrated that you can get $63 million for a painting without them. I mean, this is some would argue it's a death blow to the entire art agency world. So we'll see. But one should be aware of other arguments too, which is that the person or the fund, as it were, that bought the Beeple, which is now the third most valuable, highly paid artist in the world, already owned 20 more of them. And so they bought it with a vested interest. They've just made the value of their entire portfolio go up, right? That's one story that's in circulation. So as usual in the art world, it's very difficult to entangle because it's highly opaque, difficult to get a real grip on what is the reality. But it's still worth watching with great care, even if you think it's just symptomatic of a bubble, because it's financial innovation.
Just finally, Dr. Pippa, I would like to get your thoughts on, a global warming up to or takeover of Bitcoin. We've seen so many mixed messages on one hand, we have Treasury Secretary Janet Yellen, we have Christine Lagarde, talking, I don't want to say down Bitcoin, but kind of signaling the dangers or pitfalls. of the crypto. But then we have the IMF, coming out with a statement saying we could see a Bretton Woods 2.0, but in some sort of a digital form. So what do you make of the narrative that we're hearing from, the hierarchies around Bitcoin?
So the first thing is the vocabulary here is so muddied up. So for example, if I say I'm going to vacuum my living room, or if I say I'm going to hoover my living room, people know that that's both vacuuming. It's the same with Bitcoin. People talk about Bitcoin as if it's the only cryptocurrency, but it isn't. It's a hoover, but there are 1,500 other cryptocurrencies. And Bitcoin will not be the only one. Now, it's the one with the biggest brand name right now, but it's not necessarily the one with the greatest ease of use or efficiency. And so, again, we're at a moment in time when we're seeing a huge amount of innovation in finance. So I think crypto is exploding. Whether Bitcoin specifically is the biggest beneficiary of that is a completely different question. And then there's a third layer, which is governments are now talking about sovereign crypto. And everybody goes, wait, I thought crypto was like anti-government or outside of government. Yeah, but if the government announced that they're going to create an entirely new species of money, right? Not just digitize the dollar in your pocket, but actually create a new currency that's purely electronic and is not tied to any underlying asset. So it's not like the old notion of the dollar, there was some gold in Fort Knox somewhere. This is that you just literally make it up and you can double or have the money supply with a keystroke. That is what's coming. And that's why it's important to watch the Chinese DCEP, because that's what they have created. And people will go, oh, well, it's going to be really hard to get people to use it. No, it's not. All they're doing is they literally put the DCEP in your phone. You wake up one morning and you go, oh my God, I have like $1,000 the government just gave me and I can spend it on anything I want. I think I'll use that. That's how it'll work.
And we see the Euros plans with it. Do you think the US is too far behind on it?
They're doing this test run with JP Morgan, and that's how we would do it in the US, right? We're always going to privatize the functionality. And once it works in the private sector, then government can begin to step in and utilize it. So I think it's coming, and it's coming because it's a truly innovative way to deal with the debt problem. It removes you as a policymaker from the constraints of debt, because now you can create money out of thin air. And you might say, well, who's going to buy money you create out of thin air? And I take you back to the NFT conversation we just had. Answer: people are going to spend millions buying money out of thin air. So it's very much going to be about the story that's behind it and what advantages do you get. Like, let me go a little further and say, one thing that worries me about governments creating crypto is they'll tie it to behaviors. So if they'll say, oh, we want to reward the people who voted my way on these 5 issues, and anyone who voted against it, we don't want to benefit them. So put the money in the accounts of people who backed this kind of policy approach and deprive the ones who took the other side. It's going to get political so fast. And that has all kinds of authoritarian tones to it, which I think don't sit well in a democracy. You can do it in China, but we're going to need democratic protections around this new money.
Brilliant thoughts. Dr. Pippa, I appreciate you. I appreciate your time. And thank you so much for coming on StansberryInvestor.com.
Thank you.
Yes, come back soon. And thank you for watching. We'll have much more for you. In the meantime, remember to share us where you watch us. Thanks for being with us. I'm Daniela Cambone.